So I will be recording the session that we will make available on MEOPAR website in the coming weeks. And so I'll just leave it to you now, Robyn, to lead us to the final session.
Great. Thank you very much, Isabel, and good morning or good afternoon to everybody on the session today. Hopefully you can see my PowerPoint slides and maybe me up in the corner or in a corner of your screen as well. Most of you will have been or seen sessions 1 or 2, so I'll keep my own introduction a bit brief. I'll start by acknowledging that my own place of work is within the traditional, ancestral, and unceded lands of the Coast Salish peoples, including the Squamish, Musqueam, Stolo, Tsleil-Waututh, and Stumey nations. In my day job, I'm the Director of Management and Administration at the BC Cancer Genome Sciences Centre, and I'm also an instructor in a variety of settings, including at Mohawk College in the Research Administration Certificate Program. You'll see on the slide here a couple of different ways to get in touch with me or find out more about what it is that I'm doing. If at any time after the session today you have any questions or are looking for some resources or just would like to explore some of the topics that we're talking about, please feel free to reach out to me and I'd be happy to follow up and connect with you that way. Oops, you don't need to see my email. A reminder of the ground rules for our session today. First, that's doing that. A reminder that you can ask questions at any time. You can use the chat box. I would ask that you do that. There's 9 of you in the session today, which is a little can be a bit complicated to hear who's speaking. So if you have a question to ask, you can put something in the chat, and then maybe Isabel or myself will call on you, or you can type out your question in chat, and I'll deal with them as they come up during the session. Please don't hold your questions to the end. Feel free to ask them at any time. And because some of the materials that we're going to be talking about today is new or unfamiliar to some people, a reminder that when we are commenting and discussing the topics and questions that people have, that we should be respectful and thoughtful and kind in our interactions and dialogue around these materials. So we're on part 3 now of the Project Financial Management or Budgeting Basics webinar series. And last time I didn't have sufficient time in the session to cover the reporting element of cost management. So I'm going to start with that today and just go through why we would want to do reporting as one of our cost management elements. We often see financial reporting as being a requirement that's imposed by our institution or our funding agencies or our sponsors, but financial reporting, whether it's required by an external stakeholder or not, is still an important element for cost management on our project. It allows us to take a look at where we are with our spending compared to where we planned to be with our spending at any given point during the project. There's a couple of different ways that we can look at comparing our budgets or projection or our plan for spending with how much we have actually spent and what we have spent it on. Generally, we're looking at these things on an inception to date basis. So when our project started till now or to a particular date. So a lot of people coming up to the end of March will be looking ahead to doing annual financial reporting. So we would be doing reporting for the entire period of the previous year or the entire project up until the end of March 2021, and that would be considered inception to date. There's a variation on this that sometimes looks at quarterly or period reporting and looks at what you planned to spend in that period compared to what you actually spent in that period. And sometimes within an institution, that kind of reporting is required. They're interested in the total amount that you're spending, but they're also interested in how are you doing with your spending on a period by period basis. And what they're usually looking for is how good were your projections of what you planned to spend in that period compared to what you actually did. A challenge with that kind of reporting is it doesn't consider what was going on in the previous period and what you might think might be going on in the next period. And so it doesn't give you a project specific perspective. It just gives you a perspective for that time period that you're reporting on. So usually in project reporting, we're doing inception to date, start of the project to whatever the current date is that we're considering our reporting period is relevant for. I apologize, I'm experiencing a bit of Zoom lag, so I'm going to shut my camera off just to hopefully try and address that. So apologies, you can't gaze at me anymore, but hopefully you can see my picture. When we do our financial reporting, just like we did with our budgeting, we want to make sure that we're looking at the categories of expenses, so salaries, consumables, equipment, services, and administrative costs, as well as the various project activities that we are doing. So the different pieces of our project work, each of which will have different categories in it, as well as the totals. So we're looking at two different dimensions, categories and activities, as well as the total overall spending on the budget. And I'm going to show you with some financial reporting examples why it is important to look at your spending on a project from those various dimensions and not just look at the bottom line. When we are reporting particularly to an external stakeholder like a funding agency or a sponsor, there are often what they call variance thresholds. So you are allowed to be plus or minus 10%, or you're allowed a 5% variance for which you don't need to provide an explanation. Those are the kinds of things that we see when variance thresholds are allowed with a stakeholder. It's always important to remember that those are a tool to help you manage your time when it comes to managing the project, but those thresholds are not a target. We should never plan to be within plus or minus 10%. We should always try as much as possible to align our spending with our budget. And if we have variances, that we understand what the reason is behind those variances, not treat them as if they are flexibility when it comes to the spending. Because by the time we get all the way to the end of our project, remember that our objective with cost management is to have the revenue equal the total amount of expenses. There will be variances and differences at different points throughout the life of the project, but when we get to the end, we have to be able to show that balance and that cost recovery and zero variance between those two things. So when variance thresholds are allowed throughout the project, remember that they're a tool to help you with management, but they should never be considered as a target or any allowance for additional spending. And lastly, a reminder to remember commitments for expenses. So when we have made a commitment to hire somebody, when we've made a commitment to purchase something at a later date or to pay for something at a later date, we have to remember to account for that in our financial reporting so that we are being clear and complete when it comes to an understanding of the financial status of our project. So I'm going to show you a sample now. I'm not going to do it in PowerPoint. I'm going to do it in something else. Sorry. All right, so you should now all see a great big huge Excel spreadsheet. This is a detailed version of a spending report. It's based on a spending or financial report that I have to prepare fairly regularly for one of the funders that I deal with quite frequently. But it is a template that I've adopted and used in other instances where I'm actually not required to do reporting at this level of detail to the funder, but I do this level of detail anyway because it helps me to keep control of and understand what's happening with the spending on a project. This one is quite complicated. There are 6 different activities in the project, and for each one of these activities, I've considered a budget for all of the categories: salaries, consumables, services, administration, and equipment. So you can see if we go to, whoops, this column over here, cumulative budget to date, tells me that from the time we started the project to now, to this reporting period, that's the total budget that I had for that particular activity for that category. So I had a budget of $28,320, and the information is there for all of the different categories and activities. I will have built that budget somewhere else, and then I will populate this each quarter or each time I'm doing my financial report, whether I'm doing that internally or I'm giving that report back to a funder. So I will look at here, what did I report my expenses were in the previous report? And then what is my budget for those things in this particular quarter? So if I'm doing this reporting quarterly, what was my budget for those things in this quarter? And then in these white spaces here, I'm going to go to my financial accounts and I'm going to pull out all of the information for all of what has been spent on all of those different categories, and I will allocate or designate those things to the different activities. And it is as much work as it sounds like it is. It's going into the details of the financial account, looking at every single line and transaction and saying that belongs to activity 1, salaries and benefits, or activity 3, consumables. And then I take that information, total it up, and I put it in this report. What the report then allows me to do, if we look at these yellow boxes over on this side, it does the math for me like Excel is supposed to do, and it shows me where I've got discrepancies. So here I've spent 54,000 something dollars on consumables in activity number 1, but I actually only have a budget of $28,320 for consumables to this point. So I can see I've got a huge discrepancy when it comes to the consumables here. I would want to explore that. What's gone on? Did we buy a bunch of stuff in advance? Did we buy things and by mistake allocate them or use them in activity 1 when they should have been used somewhere else? Is this just an accounting error somewhere and that expense actually doesn't even belong to this project? By doing this reporting exercise, I can flag where I've got discrepancies and then use that information to explore within my project what has been done differently than what I was expecting. And to a large extent, that's what financial reporting in your cost management approach is going to help you to do. It will tell you information about the money that's been spent, obviously, but what you want to do is use that information to help you understand where has something else changed in the project that has resulted in a change to the spending from what I was expecting. You can see if you look way down here at the bottom of the Excel spreadsheet, this is the total. So the total expenditures and the total budget, et cetera. And you can see if I just looked at that number there, I would see that I'm within 3% of the total budget for my project. And if I just looked at that number, I would say everything's fine. But when I look at the details and I see the discrepancies in activity 1 and in activity 3, it gives me reason to go and look at these activities and the things that are being purchased and how they're being allocated and just ask those questions. Is something different than what we had been planning? And is this an error, or does this reflect change in the project that we now need to account for? When we think back to our scope time cost quality balance, has something changed about the scope of work that has led to these changes in the costs that we're now seeing in the financial reporting? This is why I would do this kind of reporting for myself. Even if it's not required by the sponsor or the funder, I will go through this work because this tells me very valuable information about the project. Now, I might ask those questions. Has something changed about the scope? Yes, it has, but we all discussed and agreed that that was a change that we were going to make. So these changes that we're seeing in our expenditures compared to our budget are understandable and acceptable. But we want to use this information to be able to ask those questions. And at the other side of that, when we see these things persist, we will know and document as part of our reporting why those changes are there and that they're okay. Just going to take a pause and see if anybody has any questions about this.
Quick question, will you provide a template like you did for the budgets?
Yeah, I will send this this template out. I guess just with a forewarning that it's kind of pre-populated with a bunch of data, so you will need to massage it and edit it to match your own project. But it should give you the tools that you need at least to get started on that, and then use the pieces and the sections that work for you in the projects that you're managing, and change or take out the pieces that don't. But it will give you that good starting place. And yes, I'll provide them. I will show you one other tab in this spreadsheet. So what we're looking at here is the detailed category report. So all of the activities are listed, and each one of the categories is shown for each activity. We can have a different way of looking at this, the detailed activity report. Oops, sorry, that's the one I was on. The detailed category report, where we group everything: salaries, consumables, services, general, and equipment. And we have activities 1, 2, 3, 4, and 5. Again, looking at this kind of report allows us to get a better picture of where we're seeing those discrepancies. Are they all occurring within the category of consumables? Well, that gives us valuable information, again, because it tells us who do we need to go and talk to better understand what's happening in the situation. If most of our discrepancies are occurring in these salaries and benefits category, we might go and talk to our human resources people. If most of the discrepancies are occurring in the consumables or equipment category, we might go and talk to the lab managers or the procurement staff about what's going on with those things. If we see most of the discrepancies are occurring in activity 1 across all different categories, we would then want to talk to the team members involved in activity 1. So it gives us those clues and different pieces of information to see where we need to go and explore further what's happening with the project. The last tab that's in this spreadsheet is what's called the statement. And it's really just an overview of all of the things that are on the previous spreadsheets, but it allows you to present a snapshot of what you've reported, what you've spent on your project to date, and how that compares to the total budget for the project. So you can see if we had an $8.3 million project, we've got $2.3 or $2.4 million left in the project. Again, that's valuable information. Are we 2 quarters into a 16-quarter project? That would be concerning that we'd spent 3/4 of the budget already. If we are 15 quarters into a 16-quarter project, we still have $2.4 million to spend and only 3 months left to do it. So again, that gives us information to go and explore questions to think about: do we need to ask for a timeline extension? And when it comes to formal financial reporting, being able to anticipate and explore, are there rules that we need to consider about where we are at with our spending? Do we have to report this to our sponsors? Is it something that we should be making them aware of? Not just because it's necessary for good management, but it's a contractual obligation to let them know these kinds of things. So this tool, the reporting tool, allows us to manage the project well, but it also can contribute to our good stakeholder communications and stakeholder management, because we'll be able to present the information that's of interest to the stakeholders in a way that's clear and complete. All right. Okay. As I said, I will provide that template when I send the slides for the session today. So we can go back to PowerPoint. So these are just screen captures of the things that we already looked at. I don't always have the flexibility of being able to move back and forth from Excel to PowerPoint. So a reminder again that the reason that we're doing this kind of management is because the scope, time, cost, quality balance is part of our ongoing thinking when it comes to managing our projects well. When we experience changes within the costs, so things are costing us more, which is something that we'll be able to tell by doing good reporting, we can then look at what is the impact or the changes that we are experiencing in the scope, quality, and time elements of our project. Or are there changes that we need to make in any of those elements because of the changes that we're experiencing on the cost side? So it is always a back and forth, but that cost management and that cost reporting will allow us to contribute to balancing the project on an ongoing basis. The rest of today's presentation was what I was originally planning to talk about, which is other key considerations when it comes to financial management of our project. So we're going to talk a little bit about key stakeholders and what their needs and requirements are. We'll look at different funding sources and funding mechanisms. I'll talk a bit about post-award management, and then also a little bit about matching funding. That's a very common thing these days, particularly in a Canadian funding environment. And so giving some thought to how we can manage that well can be an important part of overall research project management. So first off, let's look at the various funders or stakeholders. We can have our funder as being a key stakeholder. The institution where the work is going to take place is also going to be an important stakeholder. They will have their own rules and requirements for what happens with research. Certainly the research leader, the principal investigator, the department where the work is happening, the lab where the work is happening is a key stakeholder. And then whoever is the person who's been given the management and administration responsibilities for the project and the project finances is also a key stakeholder and will need information, but also to establish the approaches that are going to be taken within the project. Different funding sources also come into play as well. There are a variety of different places that funding can come in to support research. We most often think about, government grants, but we can also have partnerships or funding that comes from business or the private sector. And things that we need to think about when we have financial or funding arrangements with businesses include things like management of intellectual property and who's actually going to own it and who's responsible for identifying it, managing it, allocating the benefits of that across the project. A lot of times researchers tend to think, oh, there won't be anything that comes out of what it is that I'm doing, but the times that there are IP that arises from our research, it's really important that we understand how we're going to manage that right from the very beginning so that it doesn't derail the research activities because now we're arguing about who owns what. If we decide that from the very beginning and we don't need to use that because no IP was generated, then great. But it's an important conversation to have at the beginning, and particularly when working with the business or private sector. Another consideration with businesses is the solidity of the business's finances. So a startup company may seem like a really good opportunity because they're new and they're innovative and all of that wonderful stuff. But if they're on shaky financial ground, you have to think about, will they actually be around and be able to meet their financial commitments to the project for the life of the project? There's no way to guarantee that, but it's an important consideration and perhaps a risk element to think about when entering into a research partnership with a private company. The same is true for a large-scale company and whether their priorities will continue to support the allocation of funding to your research. They may, at this particular point, think that the work that you're going to be doing is important and aligns with their strategic objectives. But what if they get taken over by another company who has different objectives? Will the financing of your project still continue? And lastly, who's in charge? Is the business in charge of running the project, or is the researcher in the academic institution in charge of running the project? And that is really important to work that out at the beginning, because the responsibility for the financial management will come with that leadership and control element. Not that you won't do your own financial tracking, but the accountability and the responsibility of that, it needs to be clear where that sits. When it comes to working with government granting agencies, most of us are familiar with a lot of the financial requirements and constraints that come along with granting organizations and their reporting requirements and budgeting requirements and what's allowed, et cetera. Some other things to think about include the timeliness of the funding that you receive. So I know there's often a considerable lag from the time that you hear about a government granting opportunity and you write and submit your grant application, and then it can be 4, 5, 6, even longer months before you even get told whether or not your grant was successful, and then another few months beyond that before the funding actually flows to you. And so when you're trying to align your government funding or your granting funding with the research work that you need to do in the near term, it requires some careful juggling and grantsmanship to make sure that you have the funds in place to do the work that you need to do. We also have to remember when we're writing grants that those proposals that we write are responsive responsive to the government granting agencies' own requirements. So if you are working in sectors that MEOPAR is a part of, you probably are not writing grants to the Canadian Institutes for Health Research or the Canadian Cancer Society. You're probably writing them to NSERC and other similar kinds of organizations, because those are the agencies that fund the kind of research that you're doing. And so making sure that you're responsive to what the agency actually supports is an important consideration, so that you don't waste your time applying for things that you're not going to be successful on, and you don't waste the funding agencies' time reviewing and considering proposals that don't align with their objectives. And lastly, thinking about the success rate within those competitions, and conversely, the demand, the numbers of applications that those agencies will receive for their various competitions. Not that you shouldn't apply when the competition levels are high, it's just to think about what the likelihood of success is, and not relying on a single grant application to a single granting agency for the research program, but diversifying a little bit and considering other sources. Philanthropic agencies are another place that can provide funding for grant applications. Oh. Sorry, I just lost a bit of connection, so I'm just asking if people can hear me.
Yes, we can hear you.
Okay, thank you. There we go. So philanthropic agencies are another place that we can seek research funding. Like with granting agencies, it's important when we are approaching philanthropic or not-for-profit organizations or NGOs for funding, that what we're proposing in terms of research aligns with their objectives. And that's, again, important because we don't want to waste their time and energy exploring a possible project that doesn't align with what they want to do. But it's also important because of the fundraising element, which is also a part of working with philanthropic organizations. One of the researchers that I work with several years ago was having a hard time getting grant funding. I was writing a lot of grants, wasn't having a great amount of success, and so said, I'm not going to write grants anymore. I'm just going to work with our local fundraising organization, our cancer foundation. I'm just going to work with them and get all of my funding through them. And I reminded them that it's not less work to get funding from a philanthropic organization. It's just a different kind of work that you have to do. And one of those pieces of work you have to do is participate in fundraising for that organization. So you have to meet with donors to that organization. You have to participate in fundraising events for that organization as being a part of that community. And so perhaps securing the funding can be a little bit easier, particularly if what you are proposing to do aligns very well with that organization's objectives. But your work to secure that money doesn't end with the award. It goes on throughout your relationship with that agency and requires a considerable amount of time on behalf of the researchers to do that work. So it's another consideration when working with those types of organizations. And lastly, most institutions will have some type of internal funding, whether that's competitive funding or core funding that's given to different departments. And that can be made available to support research projects as well. It's, again, important to remember that there's a lot of choices that institutions have to make between what they're going to support in any one year. And the competition that there can be internally for that funding can be pretty fierce. And you're very directly competing with your colleagues and coworkers for the same pieces of money. And so it is important to remember your relationships and your connections with people when you're pursuing these dollars, knowing that you're putting yourself potentially in competition or even conflict with the person who's sitting right next to you. And the amount of dollars that I said limited dollars here, there's limited dollars at every funding agency. It's just internal opportunities can be quite rare. And again, when they happen, they can be challenging for a variety of different reasons. So let's try another exercise here, just to think about this particular scenario. So The university $1,000 to support the investigators lab and research, and they've specified as the research topic, but not the actual activities that have to be done. And so somebody has written a few paragraphs to describe what they would do with that amount of money, but they've come to you and asked you to put together a budget for this exercise. So what kinds of questions, if we're responsible for the financial management and the development of this budget, what would be some of the questions and pieces of information that we would want to gather to get started on building this budget? And I think it's probably best to use the chat box for this. Good one. How many people and what kinds of people are we talking about? What is the timeline for the funding? And I guess that has two components. When is the money going to arrive? And over what period of time are you expected or allowed to spend it? Does it all have to be spent by December, or do you have to spend it over a 5-year period of time? Yeah, what are the deliverables? What exactly are you expected to produce? Are there any non-allowable expenses? That's a really good one. Sometimes, and this is I would say a feature of working with donors or what I would call philanthropic funders, is asking these questions is very important because they may not actually know what are the things that they want and don't want. But if you have a discussion or a conversation and propose, would it be okay if we spent the money on equipment? Would it be okay if we spent the money on travel? That will encourage them to say, actually, no, I don't want you to buy any equipment with it. I only want it to go to support people. That's a really good piece of information, because then when you build your budget, the vast majority of it will be dedicated to people costs. But they might also say, actually, that would be really great if you could buy a single piece of equipment with it that would really change the direction of your research. Then you would know to direct these funds to a single equipment purchase. Is there any IP? Yeah, that's a really good question. I think it would be very rare that a donor would have reached through to intellectual property, but there still would be considerations within the institution around that. And also, if this funding, given the timing of it and the dollar amount of it, if it's something that became used as a matching funding contribution on something else, you would be linking it to another funder. And so there may be intellectual property considerations there that you would need to take into account. And so asking all of those questions when you're setting this up is very important. So here's some of the things that I would think we would need to look at. First of all, from the institution, what are their requirements? Is there a specific format that they need the budget put in, or can it be an email? We will spend $300,000 on people and equipment. That might be the level of detail that's required, but it would be good to ask and know that if there's a template that they need to have. What is the project time period? So is this something that the donor is giving $300,000, but they're giving $100,000 each year for 3 years? Then you would need to plan your budget accordingly. What are the expenses that are eligible and which ones are not? And that's a question for both the institution and the donor. And lastly, we would need to ask this question about overhead. As we talked about in the previous one, we need to be very clear from the institution, is the institution going to keep 25% of that $300,000 for overhead, in which case your research budget is only 75% of that total. And that's important. You can't count on spending the full amount if the institution is going to retain the overhead. As I said, we would need to know more from the donor about what their expectations are. Do they have expectations about what you will or will not spend the money on? And those aren't difficult conversations, but they're important to have up front because they're a lot more difficult to do later on. And then lastly, from an opportunities perspective, if there is other research or other research funding that you might be exploring or have secured that requires or would benefit from having matching funding, this kind of funding makes a perfect match because it's not encumbered by another funding source. It's just cash or support that's coming in to do the research. And if you have another funder who would give you another $300,000 because you can match it with this $300,000, maybe that's a good opportunity for the research program to be able to access funding that it couldn't previously because it didn't have any matching. So we need to think about it from that perspective as well. Again, that's a conversation with the institution and the donor to make sure they're okay with that. Most institutions and donors, though, are very happy to have you leverage their money to get more money. And that's exactly what we could do in this case. All right, let's look at the different funding mechanisms. I know many of you will already be familiar with these, but I just want to touch on them to make sure that we understand how they work. Grants, of course, are grants or awards of money to do research projects or programs. One of the features of grants is that they're very complicated and very difficult to get, and there's a lot of competition around them. But one of the opportunities with them is that they are generally pretty flexible when it comes to what you do with the funds that are awarded to you. And you have flexibility with spending the funding on different things than what you proposed, as long as you make sure you keep the funder aware of that and you don't spend it on things that are not allowed, but you have some flexibility to do things somewhat differently than what you proposed, because it's understood that this is research and science, and things can evolve and expand. When it comes to a research contract, a lot of granting mechanisms now look more like research contracts than truly look like grants. And in a research contract, there are much more firmly stated and clearly described deliverables, things that you absolutely have to do during the conduct of that research work. And that can constrain us when it comes to the expenditures that we make, because we don't have as much flexibility, for example, to spend salary money on equipment or consumables money on something else. In a grant situation, you have a little bit more flexibility. In a research contract, you usually don't, not without requesting changes or revisions to the contract and the associated budget. Collaborative partnerships would be the kind of thing that you'd enter into with an industry partner, for example, where they would not necessarily provide money for the research, but they would do some things and you would do some things, and you would pool the outputs of your work, and that would be the partnership. We can have salary awards, which by definition are to support the salaries and benefits of specific individuals or groups of individuals. Some things to think about with these various funding mechanisms is, how does the money actually flow from the funder to the lab or the institution? Do they give you the money in advance and then you spend on it and you report what you did with it? Or do you enter into an agreement, you spend the money and incur all of the expenses, you write them a report, and then they give you the money to reimburse you for what you've spent? There's advantages and disadvantages to both of those approaches, but knowing what the mechanism is going to be from the beginning will help you with what do you need to set up for financial reporting and other financial controls in your project. And another consideration is this matching funding consideration. This is sometimes referred to as co-funding. It's also sometimes referred to as leveraged funding, but I would encourage you to think about it as co-funding or matching funding. You're getting a funding from one place and you're matching that to funding from a second place so that you can do one great big huge project with money from different people. Leveraged funding means that you're referring to funding that you already have in order to justify additional funding being provided to you. It's important to know what the funder requirements are. So do they have to see that you already have your matching funding in place in order for them to give you money? Or are they going to trust you that you'll eventually raise and bring that additional matching funding in over the course of the project? Usually it's the former. You have to show that the matching funding commitments are in place before the real funder will give you their money. But that's becoming more complicated these days because of the formula that people are using for funding. It used to be co-funding was always 50-50. You get $1 from this person as long as you get $1 from somebody else. But now funding, I know some of the agencies that I work with, they have like a 4-to-1 funding ratio. So you have to go and find $4 for every dollar that we're going to give you, which doesn't seem like a really good deal. And it's difficult to see how you can manage that. Who's actually in charge then? Shouldn't it be the group that's giving you the highest percentage of the money? But it varies a lot from agency to agency. And so knowing what their requirements are and how it is you're supposed to present that in the budget. Do you only talk about what each funder is giving you, or do you refer to it as a great big pool, and then allocate afterwards whose dollar you used for what thing? We also need to consider whether we're talking in terms of dollars about cash contributions or in-kind contributions. Cash is where you actually receive money from whoever that funder or co-funder is. Money goes from them to you or your institution, and you use that to pay for things for the project to be done. In-kind contributions are determined as the value of the good or service that are provided to you by that co-funder that then you claim as matching. So in this instance, we might have a vendor who gives us a piece of equipment. So instead of making us pay for a microscope, they just give us a microscope. And the microscope has value because we can figure out what it would have cost if we were to buy it. And so the value of that microscope can be counted as a matching contribution known as an in-kind contribution. It's very complicated to determine the value of that piece of equipment. It isn't just what it says on the internet that piece of equipment is worth. There's a lot of administration that goes into determining what would you have actually paid for that piece of equipment if you'd had to buy it, which is often way different than what the list price is for a piece of equipment. So when you're using in-kind contributions, you do have to make sure that you understand how the valuation of that item is going to be made so that you are confident of how much matching contribution that represents to your project. Because we often end up in matching situations with multiple different funders, one of the tools I recommend that people do when they're thinking about this is what I call a funding map. And basically you have on this side, we have all of our different funders. In this situation, each funder is providing $250,000, but just to make things interesting, funder number one gave all of their money to funder number two. And so funder number two is actually giving us this big share of money. Each funder is giving a certain proportion of the money, and it goes to different host institutions who are participating in the project. You can see right away that this gets very complicated very quickly. With 5 different funders and 4 performing institutions, which are not exactly the same as the funders, we can end up with a situation where we have lots of reporting to do, lots of accountabilities and stakeholders that we have to keep happy, and lots of places where spending is happening that we have to be able to keep track of and align back to that money that we were getting from all of those different funders. Without at least a map to guide us as to what dollar went where, and then by extension in the budget, what was it being used for, we can lose track very quickly of whose dollar is going where. It's actually pretty important because the funders will want to know not just that you matched their money to something else, but what did you use my money for? What exactly did I buy? And so we do have to do a good job of keeping track of what happened with each dollar that we get from each funder. And a map is a really good way of at least visualizing the flow of those dollars and how they're going to be used. Let's look at another scenario really quickly. So we have an investigator who's applied for funding, and the funding agency requires 50% matching funding, and they allow for a total project budget of $1 million. So how much money can we expect to get from the funder? And then by extension, what other questions and pieces of information would we need to have in order to develop a project budget for this? Does matching funding include in-kind? I think another way to think about that is, can matching funding include in-kind? Some funders who require matching funding actually don't allow in-kind contributions. They only want to see cash. And so you might have a matching funder who's going to give you a piece of equipment, but that wouldn't be eligible here. Anybody else? Will there be overhead from the institution? Yep. We're all learning to ask that question. That's really good. What expenses are allowed? Yeah, that's important for both the funder who we're talking about, as well as whoever's giving us the matching money. Can matching funding come from a similar source? Very good question. So to some extent, who is this funder that we're talking to that is requiring us to get matching funding? So in my environment, sometimes I'm talking to Genome Canada, which requires matching funding on everything that they do in various different formula that they apply. But other federal funding from CIHR and NSERC and SSHRC cannot be used as matching funding in those circumstances because they're both federal government agencies. Interestingly, CFI funding can be used as matching funding because both Genome Canada and CFI are independent foundations from the government. It's very complicated, but it's an important question to ask. What can I use? Where can that money come from? Can we have several other funding sources? Yes, that's another good question. How many partners can there actually be? I've worked on projects where there's been 10 or 12 partner funders to the main funder, just because that's how many places we had to go to build up that 50% of the budget. So to answer the first question, we can ask for $500,000 from the funder that we're talking about, and we have to secure $500,000 from other sources. And it's important that that money be for the same objectives that we're talking about. So it can't be money that we've got for a piece of equipment that has nothing to do with our research, and we're going to use that to get the other $500,000. It does have to be overlapping with the objectives or contributing to the same main project that we're talking about. And so we would want to ask those questions about what expenses are eligible, what types of co-funding are allowed, both what funding type and is in-kind contributions allowed. As someone has said, are we allowed to use international co-funders? We might also need to ask, can we use business partnerships as co-funding contributions? Very rarely, but it does happen sometimes, institutional funding can be used as co-funding. Sometimes, or for the most part, that's not allowed. So if you have somebody in your lab who is funded by the department, generally you can't use that as co-funding, even though it's existing money, but sometimes you can. And it's an important question to ask what kinds of things are eligible, both timing and funding source. And then we would want to ask all those other pieces of information that we would in any other budget. What are the activities that we're planning to do? What are the specific aims and objectives? Where is this going to take place? Who are all of the partners that are going to be involved? Because we will need information from all of them about what funding they have and what they're going to need to spend money on. Those are the things that will go into building the budget. Lastly, I want to touch on post-award considerations. So we write our grant or work on establishing our contract, and we put our budget in place, and we get told, yes, your project can go ahead. Now we're going to start spending money. And this is what in research administration is known as the post-award period. We've been awarded the money, and now we're doing all of the things that we want to do with it. Some things we need to consider in structuring the management of our project so that we have good control over our expenses. Things like having specific rules around who is allowed to buy things and charge them to this particular project. It shouldn't be every single person in the research team. Or if it is, there should be rules about what it is that they are allowed to and not allowed to buy, or maybe spending caps. Everybody can buy stuff as long as it's less than $100, things like that, so that you have some level of control and you don't find that spending has exceeded your plan too quickly. Remember that the budget that you've put together is not a plan in the sense that you have to spend money because the budget says you have to spend it. You need to spend money only on the things that are necessary to conduct the work of the project. And even if it's budgeted, if you don't need to spend it or you don't need to spend it at this time, then you shouldn't. Remember what the variances are that are allowed when it comes to reporting, and keep control over what's happening with the expenses. Document what money has been spent. Use those reporting tools to keep track of spending versus budget, and then make revisions as necessary. I don't encourage you to keep revising your budget. You should leave your budget as it is and just keep doing comparisons against it. But you can, and sometimes it's necessary to do a full revision of your budget, maybe because the funder expects or requires it. But when we talk about revisions, it's really about to the other elements of the scope, time, cost, quality balance. So thinking about changing your scope of your project, changing your schedule in order to fit within what's happening with project costs. We also need to think about our specific agreements or contracts required. So we get a notice of award about a grant or a research award of some kind, but there's a period of time what I call the launch period of a project, where we know that our project has been funded, but there's a bunch of stuff we have to do in advance of that, like put agreements in place or contracts in place between partner organizations or between our institution and the funder. And that takes time to happen. So we need to make sure that we've accounted for that. If there are specific certificates, so ethics certificates or biosafety or animal handling or access to certain areas. So if we're going to go into a protected area for sample collection, do we need to get approvals for that? And that might be necessary to secure that approval before the funds will be released. So we need to start doing that work as well. We can also start thinking about down the road when we close out this project and the project might be audited. We do need to think about what we're going to do to prepare for that. And the best time to start thinking and planning for that is right at the beginning. The worst thing you can do is wait until you've been told your project is being audited and use that as the trigger to start pulling together all of your documentation. You should just do it all the time. And then when an audit happens, it's something that you're prepared for. If your project is selected for an audit, being clear with the group doing the audit, what the schedule is for that, what the documentation is, and also who needs to be involved in that audit discussion or conversation. There will be institutional processes that apply, and you should rely on and be familiar with those so that you know how to manage your work and your information in that. The last bullet there shouldn't be under post-project. It should just be an additional consideration is give some thought to and understand what will happen when you get to the end of the project, whether it's the completion of all of the work or just the end of the project time period, if there are funds left over. So you got $1 million in funding and you've got $20,000 that you just didn't spend because it wasn't necessary for the work of the project. What happens to that money? Does it stay with you? Does it stay with the institution? Does it go back to the funding agency? And you should try and understand what that looks like at the start of the project so that you can plan accordingly and make sure that the institution and the funding agency are aware of what that might look like as you get closer to the end of the project. Okay, last scenario. We're in year 3 of a large scale project. We've already bought a whole bunch of equipment and we're using it for the project, but the vendor has released an upgrade to a key piece of equipment that we use in our research. And we can get it, but would mean we'd have to trade in the equipment that we already bought on this particular project. The trade-in is not free. We'd have to give up the equipment that we have to get the new one, and we'd have to pay some additional dollars. We're 3 years into the project, so we've already done a good portion of the work using the existing equipment. So if we wanted to consider pursuing this trade-in and acquisition of the new equipment, what would be some of the questions we would need to ask or pieces of information we'd want to have before we decided to proceed with this? Yep. When does the project end? I didn't say how long the project was in the scenario. So if year 3 of a 3-year project, that's a different scenario than it's year 3 of a 7-year project. Yep, so we'd want to know that. Yep, what are the additional costs and is there any funding left? Yeah, if this is an infrastructure project, we might have actually spent the lion's share of the money already on the work that we've already done. So is there even any money left to accommodate this? And a related consideration to that is, even if there is money left, is it already allocated to something else? Or are you allowed to spend it on that? Is all the money that's left in the project earmarked for salaries? In which case, could you actually use it? Would you be allowed to use it? Could you still succeed in the project by spending that money on this particular thing? Yes. Can we compare the data collected with the old one and the new one? That's to me one of the most pressing questions to ask. That we often default to the finance questions, but it's the science questions that are really the most important ones to ask. Is it necessary for the planned research? So if we make this change, will we disrupt the planned research? Will we have to redo some of the work that we've already done? Will the data that we've generated previously be comparable or not to the new data that's being generated? There's also going to be a time disruption while you get rid of the old equipment, bring in the new equipment, train people to use it. And do you have time for that disruption? It's not just about the money. There's a bunch of other things that would come into play. And what do our agreements say? Our funding agreement, our agreements with our partners around the use of the equipment, our agreements with the institution who owns the equipment, by the way. So it's not the researcher's decision, it's the institution that would have to agree to it. So there's a variety of different questions that we would want to ask, but I would encourage you to focus on that research and science question first, as well as the other elements of the scope, time, cost, quality balance. It's not just can we afford it, it's should we do it, is really the question that we're looking at here. Okay. Real quick summary, if I haven't said it enough times in this session, the scope, time, cost, quality balance is what's driving our decision making. We need to remember all of the costs required and only the costs required. We need to know what our funder requirements are. Think about the why of what it is that we're doing when it comes to cost management, and document, document, document. Write down, keep copies of everything. You just never know when you're going to need it, or someone is going to need it to understand what was going on. And with that, I will come to an end with 30 seconds to spare.
Can I ask a quick question?
You may ask a quick question, yes.
Okay. So matching funding,
Yep.
it's a situation that is more and more common. Do you have tips and tricks how to better track and report when you have funding from different sources so that you can know what's going on and where it goes?
Unfortunately, the biggest tip and trick is to be doing like the reporting that I showed you. Do one of those every period, so every quarter, every year. Do one of those for every individual funder, and then do a roll-up. Take all of that and mush it together in a big spreadsheet that indicates where the money came from, so that you can get that picture of what was happening with each individual funder, and you can report individually to them, but you can also look at the project as a whole and see where all of the money came from, and most importantly, where it got spent. There's no shortcut to, unfortunately. It just requires that. But once you get, one of the things that's so important, I think, by establishing that good practice of doing the reporting, even if it's not required, is it just becomes routine, and it becomes something that you do because it's the right thing to do, and you find, as soon as you find that it helps you solve a problem, you'll want to do it all the time. And reporting to your matching funders is a good example of that.
Okay. There any more question from the group? I guess that the number we have, you can turn on the camera, the micro. I think they need to digest a little bit more.
Okay. All right. Well, thank you very much, everybody, for your time.
Thank you so much, Robyn. And I just want to remind the people that's still online that we will post the video of the training on the website on the MEOPAR webinar webpage. Thank you so much, and I will wish you a great day. See you all.